All right, wonderful, wonderful. Very good evening to everyone. How are you guys doing? I am super excited to be joining you here on this edition of the Traders Hangout. My name is David Alagbada, and I am CEO here at Swaggy Markets. How are you doing this evening? We have a session that promises to be very exciting. Very excited. I am personally looking forward to sharing with our esteemed guest who I can't already see in the background right now, but I'm just going to give you a little time. He's looking great. He's looking great. I'm just going to give you a little time for everyone from whatever part that you're in. If you're here, if you're joining us, just please just state your name and state where it is you're joining us from. Let us put you up and let us give you a shout out as we get started, as we basically warm up for everyone to join us. So if you're here, wherever it is you're reaching us out from, just give us a shout out. Please just state your name and state where it is you're reaching us from. Good evening to you. So this is W02. Good evening. Where are you reaching us from? Okay, wonderful. I can see Mr. Chukuma Kingsley. You can just give a shout out to our guest. You can see him in the background. I'll be giving a very short introduction to him very shortly, but just give us a shout out and tell us where you're reaching us from. Where are you reaching us from? Tell us what your name is and just share with us where you're reaching us from. Okay, just your name and where you're reaching us from. Tell us how you're doing, just very quickly, and say a big hello and share your excitement as to um, all that you're looking to learn today. Okay, Mr. Obafemi is reaching us from Akure, and we have another person here who's reaching us from Lagos, Nigeria. Um, we have Mr. Samuel here from Bauchi. We have Mr. Silas here from Kaduna. Mr. Chukuma is reaching us from Edo. So we're slowly just basically gathering up the numbers. And it promises to be a super exciting session. Very shortly, I'll be reading out a bit of a profile. Oh, wonderful. We have someone watching out from Cameroon, Mr. Al reaching us from Cameroon. Exciting. Mr. Nonso reaching us from Navy. How's Navy doing today? Mr. Taiwo from Emmanuel and Mr. Taiwo from Abeokuta. Lovely. Just going to take a few more shout outs and we'll just basically dive into the business of the day. The business of the day. I am super excited. So we can see here as well, Mr. Henry from Nasarawa. So it's a fairly properly spread out reach that we have here from the different corners of Nigeria. Mr. Zion from Paraka, wonderful. Excited. Another person here from Jos as well. Okay, the whole geopolitical regions are properly represented. All right, so as you keep giving them the shout outs, I'm just gonna just go in and share with you a little bit about our guest today, a very distinguished trader who's got many years of experience. He's really touched hundreds, if not thousands, really. I think it should be thousands right now over the years of people. Help them to get steady in the financial markets. He is an expert trader, a chartered wealth manager. He's also the founder of the Profitable Investors Network. He is a trader's trader, he's a trader's mentor, he's a trader in himself. And he's been gracious enough to grace us here with his presence. So without keeping us much further, I'd like us to just put a fire emoji as we get ready to bring on our distinguished guest, pastor, trader, trader's mentor, Ejimi Adegbeye. Welcome. So, with us. So
Good
excited.
evening, Sir David.
Thank you, guys. Guys, you know, I can read it. I want you to show him some love, tell him how much you appreciate being in here with us today. Everyone from wherever you are, just put up the fire emojis and let's get started. I'm so excited to have you here. How are you doing? You're looking fabulous.
Thank
You're
you,
looking
Sir David. Thank you for having me on here, and I'm grateful. Thank
you're
you.
looking
Thank you,
fabulous.
Chief.
So we're getting so much love from different parts. So much love. Obviously, a lot of people are excited to see you, and a lot more are excited. I'm sure some of the people that are in here might even know you, might have even attended some of your programs already. So we can see Chukuma Kinsley saying, "We love you, sir." A lot of people showing you a lot of shout out. How are you doing today? How are you
I'm
doing?
well. I'm well. I'm well. Thank you. I'm doing great. I'm doing great.
Wonderful, wonderful,
Thank
wonderful.
you.
So like usually the vision of the Traders Hangout is to get traders who have had more experience come to help other traders, or just basically just share their stories and just share their experiences and help home, that can help them in their trading. One of the reasons why we started this out as Suavely is because sometimes trading is a very personal sport. So sometimes you're doing it and it's just you. You might look around you and not see anybody else who's doing it around you. You might not have a family member who's around you. So sometimes it helps you when you have some kind of this type of feedback, this type of sort of programs that help you share with other programs. So you are welcome. You are welcome. And I'm just going to delve into it. I'm just going
Thank
to delve
you.
into it. I'm just going to delve
Thank
into it.
you.
So just share with us for a little. How did you get into trading? I mean, this interesting industry that has become a career for you over the many years. How did you get started in this?
Okay. I've always been fascinated with the idea of being wealthy. I can't say I came from a poor background, but I didn't come from a wealthy background either.
Okay.
And
Okay.
I saw what poverty did to some of the people who had gone ahead of me. So from an early age, I had been interested in being wealthy. It was a goal for me. I started like buying and selling, making shirts from like my teenage years. So there
Okay.
was a particular person that I met, a young individual I met in my 200 level or 300, I don't remember now. Um, he
Okay.
was um, he was a friend of my elder sister, and he had
Okay.
money, and he was very young. So I was
Okay.
a bit confused, and he wasn't doing anything illegal. He wasn't doing anything
Yeah.
shady. In fact, he was even a church boy. So
Okay.
I was very confused that where is this guy getting his money from? So I found out he was a stockbroker,
Oh. Okay.
and then he had this group of friends. And so
Mm-hmm.
I hung out with them a bit, and I found out that they were not doing badly. And so that opened my eyes up to the possibility of making money from the financial markets. And then after a while, they also got involved in FX, and I saw them become even wealthier. So I had been into designing, creating shirts, selling shirts. But then when I saw them, I was like, okay, this is something that I need to look into. And they were gracious enough to sponsor a seminar or partner
Okay.
with me to do a seminar in my university. And they paid for everything. And the thing shocked me. So they paid for the hall, they paid for their flight tickets, they transported themselves, they paid for their hotel. I was schooling in Zaria. They came from Lagos. There was a day something happened. This person hit somebody's car,
Okay.
and the person now came down, an elderly man, and started shouting at him. And he begged the man. It was this Camry muscle when it came out that time, 2008.
Mm-hmm.
And he kept begging the man. And then the man didn't listen. And people had gathered bike men. He now told the man that please, the man should stop shouting on him, that they should go to Elizade Motors. He would take the damaged car and he will buy the man a brand new version of
Wow.
the car. at that moment, I just think whatever these people are doing.
You have to be a part of it.
Exactly. A few years down the line, they got into a lot of trouble and all of that, but I was there long enough to see it work.
Yeah.
So and that got me interested. Exactly. So I was already interested in making money. I was already doing business. I was selling shirts in school. I was doing shirts for fellowships, for final year students. I was doing very well. But they showed me financial markets as a faster approach.
Yeah.
And then that was when all these forex, wonder banks, everything started springing up. So it caught my attention. So that's basically how it started.
So that's the genesis. So it seems to me like the genesis were founded first in the interest in financial emancipation of perhaps
exactly.
And also, those early on experiences that you got. So just share with us a little bit. One of your most famed comments, especially on one of your blogs, is and because it's always important that we share this early on. And one of the things that actually a lot of people admire about you is the fact that when it comes to trading, you really call it as it is. You call it as it is. I mean, you're always pretty direct and say, "Hey, listen, it's you got to get it right. You got to get it right." I know you said forex trading can change your finances for good, but it can also make you miserable. You shared about that. Can you share about what this is about, really? I mean, just share about a little bit about this experience, like why you share about this, why you say this.
Well, I think people need to, because when I got involved in forex, it was glamour all the way. There was all this hype. There was all this. Everybody kept showing you the fantastic side, and it is true. Forex trading has an unusual capacity for making you amounts of money that most people will only ever dream about in their lifetime, especially in Nigeria. But when I got involved in forex, I found out quite early that it's a two-edged sword. Number one, it takes up a lot of your time at the beginning. It can be quite addictive. So you practically neglect every other thing. And if you are losing or if you're not making progress, it can have a psychological impact on you.
It can be really frustrating.
It can make you feel like a nobody. It can make a first-class graduate feel like a total dunce. Yeah. I mean, I've had people come and say, "No, I'm a doctor. I'm a trained doctor. I'm an engineer." And I'm like, "Don't worry, forex will humble you." And so,
I totally relate with that. I mean, I came from an engineering background where you had all these pretty difficult, really difficult, complex things, and then you get into trading, and you're like, "Oh well, it's just a buy and sell, really." I mean, you just got to figure out when to buy and sell, and then you realize that it's a lot more than that. So I can totally relate with that. But then again, you seem to have you seem to have curated ways, couple of advices that you give a lot of people who are learning. I think one of them that you speak about a lot is education. You talk a lot about education and how education begins to become very important if a person is going to succeed. So just tell us a little bit about why you share that's so critical.
Okay, well, because forex trading, the barriers to entry are very low. All you need is a laptop and access to a broker. It gives you this false sense of ease. I'm grateful because when I started out by buying a lot of courses. And I mean, I don't know if you may know D8, D3, Udochi, those who have been in this thing for a while, Surefire Challenge, Mark Ray or something. So I was the first online course I bought, apart from doing other courses from other people. I remember one training I paid for, and this guy literally taught me on a Saturday and on a Sunday. He downloaded the entire Baby Peeps curriculum, photocopied it, spiral bound it, and gave it to me and collected 20,000 naira from me. And that was it. But from the get-go, it made sense to me to know that if this thing is a profession, that there's a skill to be acquired. I started placing emphasis on education. I kept saving money. I remember I would save for years, months to pay for one training. And then the second thing I did, luckily for me, I got in on LinkedIn pretty early, relative to my peers, and I joined all these algorithmic trading group. There were all these groups on LinkedIn with bank traders quants, hedge funds. I didn't understand half of what they were saying, but I just kept listening. So what that did for me, over time, I started knowing the trainers who were good and the trainers who were crap. I remember one trainer I paid for, at the end of the training, he copied all my indicators, and I started teaching him how to use my own indicators. And I was like, can I get my money back? But it didn't stop me because I knew that someone had to hold my hand to do this. And then I kept buying books and I kept reading up. I would go on Google, I would go on LinkedIn, I would ask questions. And then another thing I used to do, this Forbes hedge fund list that would come out every end of the year, I would wait for it. And immediately they published the highest earning hedge fund managers. I would Google each and every one of them. If they had mailing lists, I would join. If they had LinkedIn groups, I would join. And so I started to understand what was crap and what was not. And at that time, brokers started coming into Nigeria. I remember Alpari came in 2008, 2009.
Yeah,
I remember ACM Gold came in. So they used to have these traders fora. So I used to go there physically and I used to ask questions and we used to interact. So all of that made me realize that
there was a business side of it.
Exactly.
The proper business side of it. Because I think one of the challenges for a lot of people who come in is, like you said, the barriers to entry are really low. So it gives that sort of false sense of super ease, not just ease, like, yo, we can just get involved in this without doing a lot of work, So it's interesting that you say this because I actually share a similar story, getting to see some of the biggest companies in the world. I actually hedge funds, companies that manage capital, manage money by trading, buying and selling of different assets within the financial market. So again, it goes to education, right? It goes to seeking education. And I think one of the challenges that we have these days is that because the online space is filled with so many different kinds of information, it's a little bit difficult for a person to be able to say what's actually genuine and what's not. Do you have any tips on how a person can navigate that for instance?
Oh, definitely. One of the things that I did, and it was harder in those days because all we had were websites. You didn't have Instagram. Instagram is both a good thing and a bad thing for the forex space because the first thing that I did was I would listen out for people who were involved in the industry and know what angle they are coming from. So for example, if you are a broker, I know what angle you're coming from. If you are a hedge fund trader, I know what angle you're coming from. So if you want to get a good trainer online, or if you want to get a good trainer, the first thing you need to do is ask questions about trading. First and foremost, consume all the free material you can get. There was a season in my life where for 4 years straight, I went to bed at 5:30. I would read Forex Factory, I would read threads, I would ask questions, I would ask moderators. So after a while, I started to know what didn't work. When I meet a trainer, well, number one, if you're putting pressure on me to pay, there's this kind of pressure. When are you paying? When are you paying? When are you paying? I immediately back off. Number two, if there's a lot of showbiz, what do I mean by that? If there's a lot of flashy lifestyle, and now I'm not saying everybody that is flashy.
You can see the
Exactly. Now that is good because I have to know that to an extent you are doing okay. But another thing you need to realize is there are many people who came from another aspect of business where they're successful and then the FX space. So the second thing is if the marketing, if it's too heavy. So the first thing is consume all the free material you can get. Join fora, Forex Factory, Baby Peeps, online communities, and just learn. Then when you need to take it a step further, consume the free material of certain mentors. If they're putting pressure on you to pay, walk away. You should get some kind of value before they ask you for money. That's so important.
Absolutely.
Then another thing that I feel traders should do is have a budget for your training. And until you make progress, don't exceed that budget. For example, when I started, there was a season where my budget was $1,000. And so I would be very meticulous who I would interact with. Then there was a season where my budget went up to $5,000 annually. Then there was a season where my budget went up to $10,000 annually and then beyond on training. And I asked questions. I can ask you questions for 1 year, 1 whole year before I make payments for trainings.
Absolutely.
That's important. And make sure that I gain something from a previous training before I pay for another training. Because there are now some people who have cash for training, and all they do is just they keep buying trainings, not realizing that the information is basically the same. Trading is basically the same. It's about market sentiment, it's about market structure, and it's about position sizing. That's really all that it's about. So those are some of my own thoughts. And then go for conferences, broker conferences, exhibitions, anything free, just go. Just go.
Go for it. Just go for it. So it's interesting. We have about 65 people here. I'm still expecting a few more people as we come in. Now, you've touched upon a lot of key areas that literally everybody, and I also share this in our mentorship programs, in our training programs, the quest for education. You mentioned waking up early. I mean, you going to bed late. Mentioned going to bed late. That speaks of discipline. Those things that ensure that people get successful, either as a sports person or as a career person or as a person in any field, come into play here again. So I'm just taking notes, and I expect that our community people, our listeners, are also taking note. The discipline to follow through on learning objectives, discipline to follow through on a day-to-day basis as well. So anyways, one of the things you also mentioned, I remember reading, and it just struck me because we share about this a lot in our community as well. People who basically get involved in trading, gets to a point they feel like they have a good strategy, they get some pretty decent run of wins, and gets to that particular point where they begin to, suffer losses, or perhaps one particular trade that goes against them takes such huge percentage of that of the trading size. And I've seen a lot of traders hit margin call. For folks who are new, that means basically your trading capital gets exhausted and you don't have enough capital to sustain any open position. What are your thoughts about what are your thoughts about this? Because I know you've also shared about this before. What are your thoughts about what traders who have experienced this, who have tried several strategies, who have now come to a point where they begin to wonder, is this trading thing really for me? I mean, I've tried several strategies, and just this one time, it gets to a point where I suffer this huge drawdown, and it's really like it's beginning to feel very frustrating for them. What are your tips and nudges for those types of traders?
Okay, the first thing I say to people is, if you're in a terrible financial situation, don't trade. Let's start from there. If you are in a terrible financial situation, right, and you think forex trading is how you're going to get out of it, you will have a very painful journey. All right. So the best time to learn trading is when you don't need the income from trading. Let me just put that out there, because I started learning trading when I needed the income from trading, and it was quite hard. So that's the first thing. The second thing I tell people is this: you have to learn before you earn, mastery before money. And if you place the emphasis on money, you will become discouraged very quickly. So the first thing I should say to traders is, make up your mind that as you're learning a strategy, what you want to learn from that strategy is how to earn a particular monthly average monthly return. Why? Trading is such a funny discipline. I've never seen something as awkward or as funny as trading. Do you know that if you're in a trade and let's say you were making $1,000 on that trade, and then the trade comes back down to $500, and you close at $500, do you know you feel sad? The
Absolutely.
average emotional response is sadness. Whereas you actually made $500. Now, if another trader was in a losing trade and he was losing $1,000 and then he was sweating and all of that, and then the loss came back down to minus 500 and he closes that trade. Do you know that there's a probability that the guy who lost $500 will feel more psychologically relieved than the guy who made $500? Some days I look at trading and I'm like, what kind of business is this? Whereas the guy who made $500 is plus 500, another guy is minus 500. But the guy who actually made money is sadder than the guy who lost. So you have to really talk about your psychology in the beginning.
Absolutely.
The fact that you need to understand that you have to have a healthy approach. And what your goal is, I want to be able to have an average monthly return. An average monthly return. When I started trading, I was doing 100% a month. I didn't know I was joking. I got so whipped in the market that a few years down the line, my goal was to make 5% every month. And I was very grateful. As in, if I pull out 5% every 30 days, I'll be very grateful. So it was,
I'm sorry to cut you. You know, this particular subject of the percentage of how much a person makes. As a trading mentor myself, I've had to answer this question like hundreds of times, because literally people fly into it and look, how much money am I going to make? Like, how much money am I going to make? It's usually like the first question that they ask. So it's interesting that you address this. I mean, what you shared is often the reality of traders as they progress. I mean, you shared about starting with 100% and thinking, hey, I mean, considering how much money is in the market, I should be able to make that, right? Then recalibrating that because of risk. Recalibrating that because you understand that risk correlates with reward to 5%. A lot of the times, people don't understand that even a 5% performance, you know, which absent of compounding gets up to like 60% in a year, is often better than the performance of the top hedge funds in the world. I mean, BlackRock Capital, which is probably the world's #1 hedge fund, over $7 trillion thereabouts. We can Google that. BlackRock, it doesn't do, not done up to 40% in recent times in a year. I mean, and that is considered amazing return, 45%. So I think it's important that we share more about this in terms of helping traders properly understand and calibrate expectations accordingly, especially because of risk. Not like it can't be done.
No, I'm not saying that. I'm not saying that. When I started to train, right, other people, because I had so many losses at the beginning, so my psychology was messed up. So I had to choose such a low monthly return. But when I was hitting it, my psychology started to improve. And then when I started training other people, showing them my strategy, I now found out that they didn't have the psychological trauma that I had, so they were making more. So I now said, okay, guy, work on your psychology. But let me say this. If you don't have a strategy with an edge, I don't care how good your psychology is, you will lose. Because I hear trainers who say it's all about psychology. It's not true. If it was all about psychology, EAs should not blow accounts. If it was all about psychology, robots should not have margin calls, because robots don't have fear, they don't have greed, they have zero emotions and they still lose. So the first thing is you need to make sure you have a proven edge. The strategy you are using has positive expectancy and it has an edge. But once you have established that this strategy that I'm about to be taught, this strategy that I'm about to learn has made other people consistently profitable, then you need to work on your psychology. When I found out that there was someone who since 1986 has been doing 5% every month and he has a private jet, I just knew that guy, don't kill yourself. Yes, it's good for bragging rights to be able to say, I can double my account every month, but the goal is to put food on your table, have extra savings, and leave money for your kids when you're done. You understand what I'm trying to say? So when I put it to 5% a month, I started finding peace. Of course, over time, I pushed it up, I pushed it up, I pushed it up. If I do 20% now, oh, fantastic month. If I do above 20, I'm like, oh, what's going on here? What's going on here? So this is important to note. Yes.
So I have a lot of traders who ask, especially in our risk management classes, and a lot of traders are very curious as to position sizing. For traders, for people who are like, don't understand the concept, is functionally about putting your position sizes, your overall risk or percentage risk on an account per trade at a predefined percentage. So a lot of traders have come to understand this concept, especially the not so new ones. And by the way, if you're new in trading, that's a fundamental concept that you need to absolutely master. You need to understand that. But for the not so new traders, the question now is, hey, is 1% a comfortable risk per trade? Is 2% a comfortable risk per trade? What is a comfortable risk per trade, considering what my type of questions for people?
Okay, now, for me, the first thing that you need to understand if you're developing a strategy or building a strategy is you need to understand the win rate of that strategy. Mm-hmm. What that means is if you follow the rules verbatim and you take maybe 10 trades within a period of time, how many of those 10 trades will hit the target? How many of them will go as planned? So if you are trading a high precision strategy where immediately you enter a position, you are entering at liquidity levels, you are entering at places where momentum immediately takes off, then you can increase your risk. But the actual thing that determines the amount of risk you take is how precise your entries are. If you do not have precise entries, you have to allow more room. So you may see traders that have 20 pips as their stop loss. You may see traders that have 30 pips as their stop loss. Personally, if your stop loss is more than 25, 30 pips, you are wrong. I don't care what, except you are a position trader. And even at that, you can refine your position. I mean, if the market has to go 50 pips against you for you to know you are wrong, how about 50 pips is somebody's take profit. So how good your strategy is depends on the precision. The risk you give is the precision. So typically you have to train yourself to be sure that if market goes against me 20, 25 pips, I know I'm wrong. If you have that, then you now ask yourself, if I get 3 signals in a week or 3 signals in a day, and I take all 3, how many of them will hit stop loss? How many of them will hit profit? Then you now know what you're willing to risk. But generally, this is my rule. This is my general rule. Never lose more than 3 to 5% of your account in a day. Never lose more than 3 to 5% of your account in a day. And never lose more than 10% of your account in a week. Okay. I've noticed that once your losses exceed this, it affects your psychology to such a point that you spiral out of control and that account is gone.
Yeah, so you want to avenge the market. A lot of that
exactly.
happens. Okay.
Exactly.
So well, I think it's important to share that there continues to be like a lot of variance when it comes to trading strategies and all of that. You mentioned about the existence of position traders. You clearly have really short-term traders. Then you have really short-term, like just less than an hour type entry and exit. Then you have traders who have like intraday trades. Then you have swing traders. Then you have position traders that might have maybe slightly different realities.
Approaches, definitely.
Approaches. So maybe we should allow a little bit of that difference. So, but
definitely. I am speaking as a day trader.
Okay, as a day trader.
I am speaking as a day trader. You are not expected to hold that position for more than
24.
Yes.
24 hours.
But if you are a swing trader, obviously, you need to allow the market room to breathe. Maybe 100 pips.
Yeah.
But whoever is a swing trader, I don't think your take profit is 100 pips.
No, absolutely, absolutely. So, well, I mean, just to contribute to our learning discourse here, just to contribute to it, I think it's important to also mention that the higher the time frames or the higher the sort of trading room that a person has, the higher the room, both for in terms of entry to stop loss and also from stop loss to take profit. So so slowly so if you move like from those really short-term trades to higher time frame trades, it's important. And of course, day trading is you have to be you have to have the time to be able to effectively execute that. So one of the things that a lot of people ask is what kind of strategy is best. I think you would agree with me that it depends on their reality. It depends on if, for instance, you're a doctor that has to be on call certain times of the week, you can't maybe efficiently execute intraday trades. But I think one thing that is common to all of these trading strategies, I think you would agree with me, comes to what is the percentage risk that you're willing to take. Like whether your stop loss is 25 pips or your stop loss is 100 pips, you can still ensure that using appropriate position sizing techniques, that doesn't exceed maybe 1%. If you want to be more conservative, 0.5%, 2%, depending. But those rules are now what you set for yourself as a function of your reality. So it's just pretty interesting game that we're at now. Anyway, let me go to this question. I think it's one of your books, the Millionaire Forex Traders Handbook, and two of your books actually. The other one was What I Learned After 10,000 Hours of Trading Forex Market. You shared about a couple of other reasons. You've already shared about one or two of them, but if there's any other one I've not shared about, why many beginners struggle and what new traders can do about them. I don't know if you can just quickly top on summary. Of course, maybe later this is proprietary information, but please go ahead and just
Okay, so the three reasons why traders struggle: the first is information, the second is capitalization, and the third is association. The first reason why traders struggle is they just don't have sufficient information about how the markets work. When I sat down to figure out how the markets work, I realized that basically the market is just a graphical representation of emotions, of fear and greed. That's all. The market moves from stages of fear, caution, to enthusiasm, optimism, and then greed. And that's all that it does. And then there are certain assets. Some assets are sensitive to fear. When people are afraid, those assets exhibit greater momentum in the market. When people are excited and they are reckless, those assets exhibit greater momentum in the market. So once you know which asset reflects which emotion the most, you now know if those assets are moving, you know, okay, the market is risk on. People are excited, people are taking risks, very soon they will get reckless. And when they get reckless, the market is going to crash. When the market crashes, people are going to get afraid, they're going to run into safe haven. So when you understand the basic concepts, right, and the pillars of trading, then you now know how to structure your trades. The market is telling a story at any point in time. It's simply a battle between fearful investors and greedy investors. That's all. So information. And then information doesn't have to do with reading the news and all of that. No. Information is basically about knowing what is driving the market at this particular time and which assets are going to be moving. So that has to do with some measure of sentiment, market sentiment. As a trader, if you are trying to find information, understand how to gauge market sentiment. Some people use fundamental analysis to gauge market sentiment. Some people use geopolitical risk to gauge market sentiment. Whatever it is you use to gauge market sentiment, you have to know what is driving the market per time. For example, as we were talking, I said that I am more of a day trader right now. Last year, I was more of a position trader or a swing trader because last year the markets were trending extensively because of COVID-19. You could see from March all the way to December, it was a clear trend. It was a clear trend. Risk was clearly on. But as Biden came over and took over, we've seen that we've not had clear trends this year. We had clear inflationary trends January, February, March, but as we entered Q2, it became as if the market refused to pick a clear direction. The market is neither clearly going up or clearly coming down. Friday is an example. Friday, I know Friday's market frustrated a number of people because there were 3 clear moves, up, down, up again. And that's because you're laughing. That's because the market has not chosen a clear direction. So because the market doesn't move further and faster, then you have to be going for smaller bite sizes in the market. So market sentiment, very important. Then the second thing is market structure. You have to understand structure. When you know what is driving the markets and why it is moving, you need to know when to enter and how. And market structure simply means understanding how trends form. Oh, okay, gold is going to go up because there's a flight to safety. Fantastic. How will that uptrend happen? How do uptrends happen? What are the features of an uptrend? You understand? So you must understand market structure. How do you know an uptrend has ended? How do you know an uptrend is ranging? How do you know? So you must understand it.
Yeah. Absolutely.
It's pretty simple. Absolutely. Higher highs, higher lows, lower highs. So these are some of the concepts. Then the last thing is position sizing. So that's what I mean by information. Then secondly, capitalization. I have trained students who come and say, sir, I don't know how to trade. I'm giving up on trading. I'll say, why? They say, I blew my account. How much was in the account? $100. I agreed to $250 and then I blew it. I'm like, guy, do you know what you're saying? You turned $100 to $250 and you're saying you don't know how to trade. How do you think you did it? Your problem is not information. Your problem is capital. You just don't have enough capital. As my trading account grew bigger, my objective became capital preservation.
Absolutely.
So, excuse me?
Yes. Sorry.
So you need to understand if your problem is a problem of strategy or capital. A time came in my trading journey when I realized that, guy, you know how to trade. You just don't have enough capital. And so I stopped beating myself about strategy. I said, find a way to get sufficient capital that makes 20% a month, 10% a month livable. It was one of the reasons, amongst other reasons, that I went into trader education. Because I know that we like to think we're the next Warren Buffett, we're the next Ray Dalio. If you see 1,000 traders, only 2 are super talented traders. The remaining, we're just chugging along, taking our piece of this cake. So I now realize that you have to figure out a way to get enough capital. Then I went into trader education because apart from investing, you need to have something to sell.
Absolutely. When because that's the skill set you already have.
Yes, sir. I'm listening.
I said, absolutely. I mean, you were mentioning why you decided to, because that's a skill set you already have. I'm just sharing as to it's already something you have, and there's a world out there that requires that skill set that will find value in all of these many hours that you've spent in trying to curate the knowledge.
Exactly. So when it comes to capitalization, there are only 3 things you can do. Number 1 is use other people's money to trade. I am very careful recommending this because of the amount of pain and self-destruction I have seen when people use other people's money. And I went down that road before and I know what happened to me. So it wasn't an option for me. But if you understand the structure, you can create an organizational structure around it. You can create good risk management systems, compliance systems. It's not bad, but it's not the first thing I would advise. So the second alternative was all these trader funding programs, FTMO, all of them. But when I started trading, they didn't exist. So I didn't have that alternative. FTMO is relatively young, it's relatively new. I took my first trade in 2008. So the third alternative was trader education. So I said, if you can train a large enough number of people, you will have access to training fees and then you'll be able to fund your account. And once I did that, I left the rat race of...
And a lot of people don't know how much skill is actually required, because I followed you as well, some of the things that you say online, in terms of mastery and selling something. That's an entirely different skill set entirely in terms of how you can gather, the right momentum for the value that you're trying to put out there. So that in itself is a skill set that if people are looking to follow that type of a line, you don't have the network to gather capital as a skilled trader, or you do not choose that path. And I totally understand 100% because of my history. I've got an over 10-year history in trading, so I know full-fledged back and forth all of the possible challenges, to say the least, of being a fund manager. So, but that's by the way. So, I'll talk about this particular one that's very interesting. The crypto space in recent times has been like getting a lot of momentum. I have watched with a lot of interest, the degree of momentum around it, especially about some of the sort of king assets in crypto, like Bitcoin, for instance. Absolutely, Bitcoin rules the crypto space in terms of the sheer percentage of transactional volume as a function of the total assets that are in that space. So in recent times, obviously, there was a significant dip, and for a lot of people who had strong positive expectancy for that asset, strong expectation for it to rise, they really were caught unawares. In our community, for instance, we have a lot of people who are super bullish crypto. I am too, by the way. I should put that out there long term as the future of finance. But from a trader's perspective, who deals with intraday volatility, who understands that markets can dip, who understands that market can dip. Were you totally surprised as to Bitcoin getting up to, in excess of 60,000, all the way down to 30, then trying to heat up again to in and around 40 thereabout? What are your thoughts about that?
Okay, let me first,
especially vis-a-vis what you just shared about what forms price in terms of fear, in terms of risk on, risk off, concepts that are foundational in terms of understanding the flow of money in and out of assets.
Okay, let me say this for the record. I've said it before on another session. This will be the second time I'm saying it. I wish crypto existed when I got into forex. Because the amount of money I've seen guys make in crypto, with the amount of work they've done, crypto is easy money. As in, I know people who struggle with forex for 6 years and have nothing to show for it. I know people who dabbled into crypto 2 years ago and they are balling. So
why do you think this is so? Why do you think this is so?
Okay, well, number one, crypto is not. It's just now that crypto became leveraged and margin trading. Crypto, you were actually purchasing the underlying asset. Forex is margin trading, so your funds can go to zero. But crypto, your funds can't go to zero. Crypto, you're not buying a CFD, you're not buying price, you're buying a real asset. So even if everything crashes, you still have the real asset. In forex, if everything crashes, all you have is your laptop. There literally is nothing to hold on to. So that's the first thing. Yes.
Why we say that? I think it's important for us to also put it out there so that it's also understood that the concept of leverage is something that can be chosen. The degree of that leverage, as an example, can be chosen. You individuals can choose leverages that are, if you so choose, as low as 1 to 10. Which will give you 10 times the trading volume. And it's not, and even when you have 10 times the trading volume with the leverage of 1 to 10, the percentage of that you decide to take as your volume.
The line is breaking over here. I don't know if it's just me. It's breaking. I can't really hear you. I don't know if it's just me.
So for instance, I could have a notional value of 1 million. So let's say I have 100,000. Let's say let me bring it more practical.
The line is breaking. I don't know if it's from your end.
Okay, I think it's better now. I just wanted to
Okay, it's better. It's better now. It's better now.
So basically, what I'm trying to say is that when it comes to the concept of leverage as been applied, one of the challenges in forex is that people don't understand that concept. They take way too much leverage. Leverage of 1 to 500, for instance, which is commonly given by brokers. Any broker you set up, they give you 1 to 500, some 1 to 1,000. Gives you 500 times your trading volume potential. That's like you have $1,000 and you're actually trading like you have $500,000 in terms of volume. However, you know it's possible for a person to have $500,000 of trading power and just trade with $10 out of it or $50 out of it. So the question still boils down to, with much power comes much responsibility. So one of the challenges that I see with a lot of traders is simply don't understand the degree of responsibility that should come with trading in the financial markets from the forex space, like CFDs, margin trading from the forex. But because that's not so popular, I don't see a lot of people, even now, some of the top quote-unquote crypto mentors do not understand that concept. So because they don't understand it, even though a lot of trading
many of them are getting into trouble now. Many of them are getting into trouble now because they've moved into the crypto futures space. They've moved into leveraged tokens, and now they are seeing that this thing is not as easy as they make it out to seem. But back to the issue on ground, I'm just saying that a lot of people got very rich trading crypto, especially in the early adoption stage, as opposed to forex, and they don't necessarily know so much. Because, for example, I was shocked at how many people were surprised that crypto crashed, that Bitcoin, this recent 2 weeks crypto dump. I was surprised that they were surprised. Because if you understand market structure, you would know that there is a correction waiting. Yeah. You would know that from 33,000 to about 39,000 is a liquidity level. You will know that so many liquidity voids, liquidity gaps were created in the bull run, and they need to be mitigated. So I personally, as at beginning of the month of May, already knew that you should be bearish on crypto. And you need to continue to be bearish on crypto for quite a while. Because even from a fundamental macro perspective, Biden's body language and the monetary policy of the Federal Reserve under Biden does not support a bullish crypto. As of last week now, they've announced a $6 trillion stimulus, if I'm not mistaken, a $6 trillion stimulus program. Now that will cause some form of inflationary pressure, and that money will trickle into the crypto space. So if you are a crypto trader, I kept shouting this to some of my friends who were purely crypto guys. I said, see, if crypto is the new money, it will still follow the rules of money. Go and understand global macro. Absolutely. It will follow the rules of all money. Right from the days when they were trading tulip, they make it seem like crypto is turning water into wine. It is still fear and greed. That's all.
Absolutely. I think it goes back to those points that you raised, the points around what drives price. In fact, I had already penned it as one of the questions that we're going to share because I know how super important this is for a lot of traders. Can you hear me, guys? I can see someone saying that my line is breaking. If you can hear me, just put it in the notepad. We only got about 5 minutes more here. It's been a fantastic session. I mean, I wish that this session would just continue to go on. But fundamentally, when we understand that the price at whatever point is a factor of the perception of a mass herd of people, which goes into what you call sentiment, which you were mentioning about, which allows us to have those demand and supply areas as a function of, these sentiments. I think it can help traders better prepare for potential. Even though it doesn't look it, you can understand from a point of market sentiment perspective, from a demand supply perspective, that this is going to happen. Just like you said, I wasn't surprised whatsoever that we had that. We were always going to have either a correction or a reversal. It was always going to be one of those two, because the principle of price and demand and supply is that you're not going to always have demand, neither are you going to always have supply. There has to be somewhere along the line where one cancels out each other, and it's fantastic. Do you know that we have shared this with a lot of people, that the study of price as a phenomenon, which you can take from the forex space, can allow you to better interpret what's going on in other kinds of financial spaces. For instance, in crypto as well, we have seen books on technical analysis that have been shared for over 50 years, some of them over 100 years, talking about the herd and the behavior of the masses that still appear to be relevant even in more contemporary times. So as an advisor, I'm wondering if you can lend your voice to that as well, to say, what your thoughts are about that.
Okay, if you're trading anything that is on a chart, the first thing that I would advise you to do is understand the assets that are correlated to that chart. Correlation and intermarket analysis is so important. For example, the price of the Nigerian naira is directly correlated to crude oil price, global Brent pricing. If Brent goes up, over time, naira will go up. If Brent comes down, over time, naira will come down, if our crude oil production remains constant. So a correlated asset to the naira is crude oil price and crude oil production. That's what I mean. Any asset you are trading, identify the correlated assets based on market architecture that affect that asset. That if those assets move, the correlated assets will also respond, vice versa. This is so important. What are the correlated assets of crypto? You talk to the average crypto trader and he cannot tell you the correlated assets. So understand, if you're trading gold, what are the correlated assets for gold? If you're trading the dollar, what is real yield? What is nominal yield? What is inflation saying? If inflation moves significantly, the dollar must realign to accommodate that versus other baskets of currencies. So these are what I mean by market sentiment. The second thing you need to understand is market structure. You have to understand how trends form. How do trends form? Trends form first from some level of accumulation. There will be accumulation, and then there will be a markup all the way to an area of distribution and then a markup.
Yes. Just a moment. We're going to round this up very shortly, but let's quickly take a break right now. Let's quickly take a break. We'll be right back. All right. Let's take a quick break. Joshua is in the background. Please take us on a break, please. All right, welcome back. welcome back.
I was already vibing to the music and forgetting myself.
All right. So I mean, it's been a fabulous session, but we only have 1 hour to do this. The last banner that you saw, guys, that's for Swably Markets. We have a mentorship program actually that lasts for about 7 weeks. It's online, 7 whole weeks, almost 2 months. And it was interesting that you mentioned about correlation and diversification. It's so important. I mean, it's fantastic to me that a lot of the key useful trading concepts that a lot of traders who get successful, they're very similar actually. I mean, you sure about all of this, and I'm saying to myself, yeah, that's so absolutely, and very key, because if you understand correlated assets, you can appropriately diversify your portfolio. You can understand the flow of value from one asset to another. So it's super critical. Somebody's asking, this is one of those, this is probably going to be the last question we're going to take because we're already out of time. Hello, Mr. Ejimi, what advice can you give the crypto traders now based on the coin they're holding? I mean, this is such a generic question, but hey, I want to give you an opportunity to, this is such a generic
Okay, number one, any coin that you don't know who created it, right? And you're holding on to it in this market is a bad idea. Number two, any coin that you don't understand the use case, you don't know the white paper, you don't know the use case for that coin, is not such a great idea. Many people, because of the pump and dump, the Shiba gang, the Safe Moon gangs, the meme coin holders, if you are holding a meme coin thinking it will rise, it will rally, please just sell it and switch into Tether, or switch USD Tether, BUSD, or switch into an exchange coin, Binance coin, BNB, or just switch into good old Ethereum and Bitcoin. But if you were holding on to a meme coin when this dump started, cut your losses. Or else your mouth going dry like the sand in the desert.
So I understand it's been such a period of heartbreak for a lot of people in the last 2 weeks thereabout, and
they'll be fine. They'll be all right. We've been there. We've done that. They'll be fine.
I commiserate with everyone, but the truth.
Sorry, I'm laughing, guys. I'm sorry.
No, but the truth of the matter is, because of how much potential exists, we should continue to do this, but we should take lessons from it. That's the thing. Whatever point you're in your trading journey, take lessons from it. Whatever asset you're trading, take lessons from it. Just to round off, I'll give an announcement. We have the PMI. The PMI is Swably Markets Professional Mentorship Program. That lasts for 7 weeks, almost 8 weeks. That's almost 2 months. So 3 sessions per week, almost 6 hours. Then a whole lot of stuff in there. We will be putting up the link now. So for anyone who's interested in sort of evaluating that, you can check that out pretty quickly. But we will also, please, Pastor Jimmy, can you share with us what your handles are and any other thing that you feel like you have for the trading community, not just here, but the ones that are going to watch us later, that you have that will be of value, those places you think, anywhere that you they can find more resources.
Okay. For those of you who follow me on Instagram, at Ejimi _the profitable investor _ in every word, Ejimi _ the profitable investor. Exactly. Then you can join my free Facebook group. About 24,000 people are there. I share 2 free strategies. You can use to test the waters if you're trying to make up your mind whether you should trade or not. Okay. And then apart from that, I'm pretty much available online, YouTube channel, and that's basically it. All right. Okay. I also use this as a disclaimer. I don't do fund management, and when I do it, I will announce it properly. It will be properly structured, so I don't, in case, because I say you can find me on social media. If you find anybody saying they are me on social media asking you for money, it is not me. Thank you very much.
I'm trying to get these links up right now. So this is Instagram is
at Ejimi, the profitable investor.
The profitable investor. Okay, let me get that.
That's exactly it. Then www.ejimiadegbeye.com.
Okay.
www.ejimiadegbeye.com.
Please look at what's posted on the screen. Is this correct, please? At AG
Yes.
the profitable
No, the
investor.
profitable then _investor. What is scrolling in the tab is correct, but what is in the chat is not correct.
Okay, what is scrolling in the tab is correct. Okay, what about your
what
website?
Is in the chat? The chat is wrong. Maybe you take that down for me. The chat is wrong.
I've taken the chat off, but what about the website? Where can
www.ejimiadegbeye.com. www.ejimiadegbeye.com. No. What you have scrolling is correct. What you have typed in the comments is wrong.
Okay, so we removed that. I just want to get the website up right now. So just get a website so that people can check out. There's a lot of interesting stuff on the website.
That's it.
Okay.
That's
all right. Wonderful. All right.
Thank you very much.
So first of all, I want to say a very big thank you. Remember, guys, education is the most important thing in this market if you want to succeed. So I mean, everywhere where you can find quality, not just sort of off the mill, quality education that can help you understand properly how to be successful is where you want to be. So we've shared already what we've got, and the mentorship is coming up on the 20th of this month, by the way, the 20th of this month. That's about
20th of June.
20th of June, yeah, 20th of June. 20th of June. So you can find out more about the concepts that will be shared at swablymarkets.com/mentorship. I want to say another big thank you. It feels like we shouldn't go. We're already 8 minutes past. I still have a lot of questions to ask you, and I'm sure a lot of people still have other questions to ask you. But again, you can go to the handles on Instagram and go to the website. I'm sure there are contact forms on the website that can allow you to sign up for newsletters and other things, and you will continue to get from Mr. Ejimi. On behalf of myself and the Swably team, Joshua behind, and all of the guys, Jerry, everyone else, I want to say a very big thank you to you for coming up here, and I want to say thank you
for having me.
We look forward to the next time we're going to do this. So everyone, you can say your byes from here. Let us put it up. From here, just say bye to you, and we appreciate you. Thank you.
Thank you, Sir David. Have a great one. Cheers.
Cheers. Yeah.
God bless.
Yeah. So.
Proud to know, guys, forex has been trading me, and I've lost a lot of money. I may not have lost up to what you have lost out there, but I've lost quite some amount. Yes, until I met Swably Market. I used to believe and I used to think there is a holy grail to forex trading, which a lot of professionals do not tell us. But meeting with Swably Market, I found out there is no holy grail anywhere. The holy grail is you, because you are the only constant thing in the market. Good morning, everyone. My name is Adewi James. I'm a graduate of the PMI Professional Mentorship Initiative of the Swably Market, a forex institute. I just finished a 7-week intense course, beginning from the fundamentals of forex. We delve into the technical aspect of forex. We moved a step further into the quantitative aspect of forex, which most people do not even talk about, except the institutional traders. We moved into portfolio management, building up a portfolio, speaking about diversification. Not just that, we moved into economics, understanding the law of demand and supply, how it affects the currencies we're trading. We moved into macroeconomics and microeconomics, these things that affect the policies that affect the movement of prices. These are the things and much more that we learned in Swably Market. Thanks to Swably Market for unveiling this secret to us. I can boldly say anywhere that I am a trader. Before, forex traded me, but now, not now. Now I'm a better person. And I'm encouraging everyone out there, if you have ever lost money before, or if you've ever dreamt of trading forex at all, or whatever kind of trading, be it commodity trading, you want to trade oil, any form of trading, come to Suavely Market. You will gain value for your time and value for your money. Thank you very much, the Suavely team. Thank you, Mr. David Alagbada. Thank you, Mr. Joshua. Thank you, everyone. I remain James Adegbeye, a proud alumni of Professional Mentorship Institute of Suavely Market. Thank you.